Good evening, you're watching Bizworld. I'm Adrian Seet. Eligible Malaysians can redeem the 100 ringgit eMADANI credit from today until February 20th of next year. The credit can be used only for physical purchases via the participating e-wallets at 1.8 million retailers and businesses nationwide. In a statement, the Finance Minister had also advised members of the public to be cautious of offers by irresponsible parties providing cash out or peer-to-peer transfer of the eMADANI credit. The government will take stern action against the offenders by blocking their account and forfeiting the e-credit. The eMADANI program has the objectives of stimulating the digital economy and fostering a cashless culture. Malaysia expects to see more green and climate change-related investments next year to support the economic growth, which is projected at 4 to 5%. Bank Negara Governor Dato' Abdul Rashid Ghaffur said the government has undertaken a number of multi-year projects that will contribute towards the economic growth from next year onwards. These include the National Energy Transition Roadmap and the new Industrial Master Plan 2030. Meanwhile, on the ringgit's performance, Abdul Rashid stressed that the central bank remains committed to avoid excessive volatility in the currency market, as emerging markets are largely affected by the strength of the US dollar. Foreign investors continued to bolster their presence as net buyers on Bursa Malaysia, contributing 246.3 million ringgit for the fifth consecutive week. According to MIDF research, the figure indicated a significant decrease of 35.7% compared to the previous week. The top three sectors with the highest inflows were financial services, utilities and healthcare. Meanwhile, the top three sectors with the highest outflows were consumer products, logistics and energy. On another note, local institutions persistently engage in net selling for the fifth consecutive week, divesting equities totaling 457.2 million ringgit. Following 7 weeks of continuous net selling, local retailers reversed their trend by net buying 210.9 million ringgit on Bursa Malaysia last week. Malaysian banks will overcome external headwinds to deliver a resilient operating performance next year. Strong domestic economic conditions will support borrowers and limit slips into non-payment. According to S&P Global Ratings, asset quality of Malaysian banks will benefit from the country's stable economic conditions and low unemployment rate. By its forecasts, Malaysia's strong domestic demand will drive a gross domestic product growth of 4.5% in 2024, higher than 4% in 2023. It also said a low unemployment rate limits defaults in household loans, which form about 60% of the banking sector's loan portfolio. Good domestic conditions had also steadily reduced pandemic-related restructured loans, such as borrowings under repayment assistance. On inflation, although higher than historical levels, had been under control relative to the net oil importing emerging markets in the region. RHB Research has maintained a neutral call on the telecommunications sector. This after a second attempt to have mobile network operators, MNOs, take interests in Digital National DNB came with due diligence and conditions precedent, making it possible for the deal to fall through. On Friday, 5 MNOs signed conditional share subscription agreements SSA with DNB to take out 14% for 233 million ringgit each. They will collectively have a 70% interest, while DNB will hold the remaining 30%. The deal is slated for completion by early second quarter next year, with formal shareholder agreements to follow. Shareholder approvals are not required for Maxis and CelcomDigi. Meanwhile, in October of last year, Celcom Axiata, DG Telecommunications, now CelcomDigi, YTL Communications and TM executed the SSA to take up equity shares in DNB. And that's all the time we have for Bizworld. I'm Adrian Seet. Thank you for investing your time with us and stay tuned to TV3.